Welcome to PrimeAlpha's interview series, insights from industry practitioners discussing their journey and their discoveries. Hello, my name is Amanda Jogia, the CEO of PrimeAlpha, an online ecosystem bringing together alternative opportunities and their investors. Today, I have the pleasure of introducing Hoon Kim, the founder and CIO of Quantino Capital Management. Quantino has a singular focus of enhancing the after-tax wealth of its investors. The firm offers the next evolution of tax loss harvesting strategies available in fully customizable, separately managed accounts. Welcome, Hoon.
Thank you.
Nice to have you here. It is so interesting what you do and so differentiated. So I can't wait to hear about your career journey.
Great. First, Amanda, thanks for having me. About how we got here. I got my PhD from Carnegie Mellon University. My doctoral dissertation was about empirical research, how the accounting information, such as like financial statements across large number of firms, affect stock price and volatility, which is natural topic of interest for equity quants. So I decided to be a quant. So I started my job at Mellon Capital Management in San Francisco as a quant researcher, and then moved to AQR in 2005. Initially, I did a lot of quantitative stock selection research, a lot of modeling, handling big data, natural language processing, you name it. And then I built a team to focus on another challenge in quant investing. It's about implementing those alpha into the real world portfolios. A lot of portfolio optimization along with risk management, implementation research, trading costs, and taxes. Anything happening in the real world. So it's about how to incorporate this conceptual, abstract alpha idea into the real world portfolio. And as you guess, tax consequences are an important part in the real world. So what we believe in is tax consideration should be an integral part of portfolio management, not an afterthought. That's why we started Quantino in 2018.
So what was that pivotal moment when you decided to venture out and be an entrepreneur?
During my career, I'm typically the same as all of us at Quantino. We have seen that many institutional managers, they are focusing on primarily serving tax-exempt institutions like pensions, endowments, and sovereign wealth funds. And they have some taxable investors as a clients there too. But guess what? Most of their attention goes to serving tax-exempt investors. Partially because taxable investors like family offices, RIAs, high net worth investors, kind of fragmented. And they don't have strong voice like pensions and sovereign wealth funds. So we think the taxable investor base has been underserved for a long time. I think they deserve better products, innovative products, and focus. Quantino's singular focus is to serve taxable investors to maximize their after-tax wealth.
Can I ask, how do you do what you do?
Through tax loss harvesting.
So how has the business evolved since you founded the firm?
Because of my background is quant and accounting and taxes, right? I always interested in the intersection between taxes and investment. So I know something about portfolio optimization. I've been running this quant equity hedge fund for like 20 years. I know something about taxes. So now it's time to connect those dots. So this idea came out. Why don't we combine this tax loss harvesting strategy, which is very popular strategy among taxable investors and especially popular among like long-only passive managers. Why don't we combine that tax loss harvesting idea, implement that in long, short, equity market neutral hedge fund strategies? It turns out it's a great idea because if you think about it, we can harvest tax losses in any market environment. Stocks making money, the short side generate tax losses. Stocks losing money, long sides generate tax losses. So we are able to generate tax losses in any market environment. In early 2018, that's how Quantino started. So our initial focus was to build this tax efficient, tax loss harvesting hedge fund strategy and offer to our clients. What's interesting at Quantino is that we constantly listen to our clients. Again, taxable clients. We try to understand what their pain points are, understand what they want, and then we find ways to address those clients' needs. So the next evolution in this space is, hey, why don't we take this investment strategy, very tax efficient tax loss harvesting strategy, and implement that not through hedge fund structure, but through customizable, separately managed account, SMAs. That's how our Deals platform was born. The Deals stands for Direct, Equity, Active, Long, Short. Direct meaning you directly own the assets, it's SMA. And unlike a commingled fund where everybody contribute cash and there's only one portfolio behind it, they divvy up the performance, separately managed account. Each individual own the assets. And we have each portfolio for each client, which means we can ultimately customize how the strategy would look like for each client. Again, not all investors want market neutral. Some of them want, hey, I want beta of 1. Some of them say, hey, I just want half beta. Having SMA enables us to serve those different types of clients with different portfolios. So this Deals platform is designed to deliver those very different types of strategies, very tax efficient, all of them, and customized to each client to maximize their after-tax wealth.
You covered how you serve your clients, but in terms of, like, for example, a family office, if they're buying your product, like, how do they implement it within their total portfolio allocation?
Great question. We have to always think from top down, meaning you start with asset allocations. What's a typical asset allocation to look like for family offices or any taxable investors? They have public assets, they have private assets. Public assets, there's an equity allocation, and there's a fixed income allocations. And the private asset side, they have private equities, real estates, arts, wines, whatever you call it. So we are not handling that. So we're focusing on public markets. In the public markets, you hold equities, right? Our Deals SMA product basically can build your core equity allocations. So let's say if you have 40% of your assets allocated into public equities, what we do is we build that public equities. You define the benchmark. Hey, I want to follow S&P 500, Russell 3, MSCI World. Any benchmark that you have in mind, we can basically replicate those benchmarks. And then on top of that, what we do is we adding small amount of long and short. So let's say if you have $10 million equity allocations, we add $3 million worth of shorts and $3 million worth of longs. Again, it's all done through SMAs. You customize whatever you want. And that small amount of long-short overlay starts generating tax losses, mostly short-term capital losses, which will offset capital gains that you have in other places, making your entire asset allocation more tax efficient.
That is so interesting and compelling. I don't know if you know this, but I'm an accountant by trade. So I started my career.
I'm an accountant by training too.
So I'm going to date myself. I started at Coopers and Lybrand. So that's how old I am.
Oh, okay. Pricewaterhouse, how's that?
we merged. That is awesome. In terms of starting your firm in 2018, what do you think you guys got right? And where did you go wrong? And what was the lesson learned?
Yeah, that's exactly how we evolved. We thought initially when we started in 2018, having very tax efficient vehicle. Again, equity market neutral, levered equity market neutral strategy is a great way of generating large amount of tax losses. That was our initial thought. Great product, it should sell. What we were missing, what we learned along the way is that tax efficiency is one thing. Another important thing is recognizing the fact that each individual client, they have different asset allocation preferences. They have different tax situations. One size fits all approach does not make sense. We have to focus on listening to our clients, understand their needs, and find a way to serve that clients better. That's the lesson we learned. That's why the Deals platform was born, to serve that client base with the best tool that we have and customize based on their unique needs and preferences.
So how do you help your clients?
Again, we listen to our clients. We learn what's missing and what they need. So we feel like this Deals platform, great tax loss harvesting tool that offers everything that you can find from traditional loan-only tax loss harvesting, but with larger magnitude and more consistent tax alpha generation. Think of Deals as a tool, and you're using that tool. A few, examples, use cases. If you have a client who's using this loan-only tax loss harvesting for a few years, after a few years, you cannot generate any more tax losses. So what Deals platform can do is basically adding small amount of long and short on top of the existing holdings that you have from tax loss harvesting and start generating tax losses again so that you can offset taxable gains in other places to maximize your after-tax wealth on the aggregate level. Another interesting use case is that you hold ETF, SPY ETF, or mutual funds. Those are valuable assets. So while you are just sitting on it, you can actually utilize those resources, adding small amount of long and short. And that long and short positions, we call overlay, start generating tax losses. There's a way for you to get tax losses without adding any more cash. Just utilize the resources, whichever ETF, the mutual fund, or basket of stocks. You can utilize that to start generating tax losses. Another interesting use case is about the concentrated stock diversification. You have a client, large amount of their wealth is tied to one single low-cost basis concentrated stocks. Many times they want to diversify. They would rather hold S&P 500 rather than one single stock. But the thing is, if you sell and pay taxes, even though long-term capital gains taxes, it will go up. But like if you live in California or New York, close to 40% of your wealth is gone through taxes, selling them. What we're offering there is a concentrated stock that's your valuable resource that you hold. We utilize that to overlay against small amount of long and short extensions that generate tax losses that will offset taxable gains from the selling of your concentrated stock positions. And then we move that proceed into a long side, which is diversified set of portfolios. So within short amount of time, you would be diversifying from your concentrated stocks into a S&P like index exposures in a tax neutral way. There are many different use cases. Again, those use cases are case by case. Each individual, they have different situations. We are here to sit down with you and think about ways to improve your after-tax wealth.
What challenges do you see for taxable investors today?
The consensus view here is that the tax rates are likely to go up in the near future. It's not done yet. It didn't pass the Congress yet. But consensus view is tax rate will go up. We don't know how much, but it's going to go up. Some may disagree with that view, but we haven't seen anybody who predict that tax rate will go down, especially for wealthy clients. Most clients want to prepare for higher tax rate in the future. But the thing is, they don't have many tools available to deal with that situation. We believe that our Deals platform is well positioned to address and help those clients for those challenging environment going on.
So here's my favorite question. What do you think is your superpower and why?
That's a great question. So when I look back throughout my career, there are many important turning points. And in every turning point, there are people around me helping me choose the right path, encourage me to get better, and gave me an opportunity actually to do it. So I'm very grateful that I have those people helping me around me. In that sense, I'm very lucky. Now, I'm thinking about my superpower. It is this fact that I know that I don't have superpower at all. That makes me always try to find something to learn from other people around me. And I was lucky enough to be around with many smart, talented, successful people, my former bosses, colleagues, and clients. And I have this great opportunity to learn from those people. That's, I think, what makes me better. That's what makes Quantino better. That's my superpower, not about knowing the lack of superpower.
Well, this has been a pleasure and it's so differentiated and so unique. I'm so excited to bring this to our audience. Thank you for your time and we need to have you back on.
Yeah, thank you. It was fun to be here and I appreciate for an opportunity to share our stories.